This is Nightly Business Report with Sue Herrera and Bill Griffin.
Our economy is strong. Growth is running at a healthy clip.
The Federal Reserve hikes rates for the 8th time since 2015. What this means for the economy, the market, and your wallet. New rules? Most corporations don't want the government involved in their business. But on Capitol Hill today, big tech companies are pushing for more oversight. One of a kind, how the first and only female CEO of a publicly traded home builder is trying to close the gender gap. Those stories and more tonight on Nightly Business Report for Wednesday, September 26th. And good evening, everyone. I'm Contessa Brewer, in tonight for Sue Herrera and Bill Griffith. We begin with one of the most important aspects of the American economy, interest rates. Today, the Federal Reserve lifted its benchmark rate for the third time this year, the 8th time since 2015. Fed Chair Jerome Powell called the economy strong, and he said he's not concerned about inflation. The upbeat outlook led the central bank to increase its forecast for growth this year and next. Steve Leisman is in Washington with more on today's decision.
The Federal Reserve raising interest rates by a quarter percentage point as expected to a new range of 2 to 2.25%, and all but signaling another rate hike is coming as soon as December. Fed Chairman Jay Powell was pretty clear why the Fed is taking this course of action.
Our economy is strong. Growth is running at a healthy clip. Unemployment is low. The number of people working is rising steadily, and wages are up. Inflation is low and stable. All of these are very good signs.
Amid expectations for the good times to continue, Fed officials on average forecast that rates will rise another 75 basis points next year and finish above 3%. But Powell also said there are risks out there to raising rates and risks to not raising rates.
If we move too quickly, we can, snuff out a recovery unnecessarily and inflation falls short of its 2% target. Or if we move too slowly, we have an economy that can overheat. So that's happened through history. We don't see any signs of that now, but we're always trying to navigate between those two shoals. And we think that gradually, raising interest rates is the way that we kind of take both of those risks seriously.
Powell did not seem overly concerned about the high level of the stock market or lots of debt on the books of corporations, though he did say it represented a risk. He also said that tariffs represent a risk to the economy, but hadn't shown up yet in the economic data. So Powell said these are good times, and the Fed thinks by nudging rates higher and stopping at a low level, it can let the good times roll just a little bit longer. For Nightly Business Report, I'm Steve Leisman in Washington.
Well, interest rates influence everything from the economy to the financial market. So what could the path of rate hikes mean for your investments? David Leibowitz is a global market strategist at JP Morgan Asset Management. David, good to talk to you today. When we're talking about this rate hike, what will we expect to see as an impact on the overall economy?
So, I think that the Fed, to Chairman Powell's point, is trying to move gradually. They're trying to telegraph exactly what they're doing. But, frankly, with 8 rate hikes since 2015, we've already seen a bit of a slowdown this year in auto spending. We've seen a slowdown in home spending. So I think higher rates are already taking hold on some of those more interest rate sensitive sectors of the U.S. economy. Obviously, growth has remained relatively robust given all of the fiscal stimulus being pumped into the system. But, my expectation is that as rates continue to move higher, you could theoretically see those more interest rate sensitive sectors like autos and housing come under further pressure over the next few quarters.
And we saw that even today with utilities. Are we expecting to see that with market stocks, with equities here that people might be invested in their 401k?
So I think that, equities, it's important to draw a line in the sand between those stocks that benefit from higher interest rates and those stocks that come under pressure from higher interest rates. A lot of investors have used things like utility stocks, consumer staple stocks, telecom stocks as a way of producing more income in their portfolios over the course of the current expansion, given that interest rates have been so low for the majority of this economic growth period. But, if you think about things like financials, technology, energy, they tend to actually do fairly well when interest rates rise. So we think that investors probably need to be more selective at the current juncture. We certainly expect those high dividend paying sectors to remain under pressure, but that doesn't mean that there are no opportunities that investors can take advantage of.
And what's the impact of these rate hikes on treasuries? We saw the yields moving lower today.
Yep. So obviously, when interest rates rise, bond prices fall, and a lot of investors that I've been speaking with have noted that they're seeing negative returns from their bond funds for the first time in a number of years. I think that Treasury yields coming down today were a reflection of the market interpreting the Fed's comments as being a little bit softer, a little bit more dovish than what they were expecting. Frankly, we still think that the path of least resistance for interest rates is higher. The Fed's going to hike again in December, in our view. We think 2, maybe even 3 times next year. That should lead interest rates to gradually grind higher over the next 12 to 18 months.
David Leibovitz with JP Morgan Asset Management. David, good to see you. Thank you.
Thanks for having me.
Interest rates also influence the cost of borrowing, the return on savings, and your pocketbook overall. We're joined now by Mark Hamrick, Senior Economic Analyst at bankrate.com. All right, let's dive down into the ways that we might see this. When it comes to what a lot of people across this nation have, auto loans, will we expect to see higher rates translating to what we're paying per month for autos?
Well, first of all, if you already have an auto loan, that is not likely to change. We're really talking about auto loans for future customers. And, our point of living at Bankrate is to remind people to shop around. That holds true really across the borrowing universe. And let's remember that while there may be an average rate of, let's just say, 5% for auto loans, or they'll likely be going higher, that shoppers can do better than that. And automakers continue to add incentives, including low-cost financing.
And what about mortgages? Will you see an impact on mortgages?
Really more so for adjustable rate mortgages. Those who have fixed rate mortgages, obviously those are fixed by definition. So for those who are either still coming into the market and will expect to be in their homes in future years, a number of years, we generally recommend that they look at fixed rate mortgages. And for those who have rates that are going to reset, they want to look at how much longer they'll be in their home and possibly refinance into a fixed rate mortgage.
All right, and then finally, I wanted to ask you, in terms of the impact on what we're paying, what about credit card debt? A lot of Americans carry some debt from month to month. Will you see an impact there?
Yeah, absolutely. I tend to underscore this more than anything else when it comes to borrowing, because we've now crossed over the $1 trillion level in terms of credit card debt. Since the Fed began tightening, obviously raising its benchmark rate by 2% since the beginning in 2015, we've seen the average for credit card rates go up from the 15% level into the 17% level. And as we've already established here, we do look for perhaps as many as 4 rate hikes over the coming years. So that means that we might be 2/3 of the way through these rate hikes. So at Bankrate, we continue to advise people to pay down, or better off, pay off credit card debt, and to continue to save.
All right, so if that's the advice there, are there, on ways that you avoid some of the pain that might come with a rate hike, do you also have advice for people on how they might take advantage of a coming rate hike?
Absolutely. Well, I like to say that savers were the often forgotten casualties of the low interest rate environment, which was essentially the medicine the Federal Reserve had to employ when we were in the midst of a financial crisis. Slowly but surely, we're seeing savings rates rise. But again, it's really amazing, and this is demonstrated on our site, how much variance we see if you just shop around. So while we might say that, for example, the average on a 1-year CD is below 1%, you can get substantially higher than that by shopping. Same for 2-year CDs, 5-year CDs as well.
All right, Mark Hamrick with bankrate.com. Thanks for the advice.
Great to be with you. Thank you.
Those inflation comments from the Fed chief set off a chain of events on Wall Street. Bond yields turned lower, which pressured bank stocks. And because of the financial sector, which is, of course, critical, the broader market fell, gave up earlier gains. The Dow Jones Industrial Average dropped 106 points to 26,385. The NASDAQ was off 17, and the S&P 500 was down 9. In a speech to the United Nations Security Council, President Trump called out China, not for its trade tactics, but for trying to influence the upcoming midterm elections.
Regrettably, we found that China has been attempting to interfere in our upcoming 2018 election, coming up in November, against my administration. They do not want me or us to win, because I am the first president ever to challenge China on trade. And we are winning on trade. We are winning at every level. We don't want them to meddle or interfere in our upcoming election.
Experts say those comments open up a new front in Trump's administration posture towards the world's second largest economy. Well, we want to take some time to look at today's upgrades and downgrades. IBM was upgraded to buy from neutral at UBS. The analyst cites strong demand for its services, artificial intelligence, and cloud offerings. The price target is $180. The stock rose more than 1% to $151.61. GoPro's rating was lifted to outperform from perform at Oppenheimer. The analyst there calls its products compelling. The price target is $9. The stock gained 4% to $692. Activision, Blizzard's price target was raised to $88 at Piper Jaffray. The analyst says the game Call of Duty Black Ops 4 could help boost earnings. The firm maintains its overweight rating. Shares gained 1% to $81.57. And still ahead, a new phone scam and a call that no parent ever expects to get. San Francisco officials have temporarily shut down the city's new $2 billion transit center after a crack was found in a steel beam. Engineers are now inspecting that beam. The new transit hub opened a month ago, and it's expected to accommodate 100,000 passengers each weekday. The House of Representatives tonight passed an $850 billion spending bill. That measure funds the Defense Department and includes a plan to avoid a government shutdown Sunday. But the president still has to agree and sign that measure. Executives from major tech companies were back on Capitol Hill testifying on consumer privacy. And today, they were pushing lawmakers to establish federal regulations. Julia Borston explains.
Executives from AT&T, Amazon, Apple, Google, Twitter, and Charter Communications taking the stand before the Senate Commerce Committee to answer questions about how they protect consumer data and the most effective way to craft regulation.
There is a strong desire by both Republicans and Democrats and by both industry and public interest groups to work in good faith to reach a consensus on a national consumer data privacy law that will help consumers promote innovation, reward organizations with little to hide, and force shady practitioners to clean up their act.
We do not sell personal information. We acknowledge that we have made mistakes in the past from which we've learned and improved our privacy program. We understand that the foundation of our business is trust.
With the general consensus that regulation is inevitable, the question is what the laws will look like. And companies would prefer to have federal legislation because the consistency is easier to navigate than a patchwork of state laws. The concern of many of the tech giants testifying, this summer California passed a new privacy law which is considered comprehensive and stringent and could hinder their growth.
Now what we're seeing is that the states, while the federal government is discussing it and not doing anything, the states are starting to move, starting with California, and others are talking about it. So the federal government is really under pressure now to come up with a law. Otherwise, you're going to have a patchwork of laws, which will be really unworkable.
With Google saying that complying with European privacy regulations is a tremendous challenge, warning that similar laws here would hurt startups. The question is what regulations will look like.
Companies love to complain about regulation, and yes, it is a burden, but I think the bigger problem for companies is uncertainty. I think that, if they have a regulatory framework that they can work within and that they can help shape, which is why I think you're seeing so many of these big companies say, we are in favor of some sort of regulatory framework because they want to be part of the rulemaking process.
With questioning today focusing on the potential for mandatory notification of data breaches within a certain time period and questions about whether consumers should have to affirmatively opt in to having their data used and shared. Congress is trying to figure out what kind of rules could protect consumers without hindering innovation and growth. For Nightly Business Report, I'm Julia Borston in Los Angeles.
CarMax tops expectations, and that's where we begin tonight's market focus. The car retailer said new digital initiatives helped drive an increase in same-store sales, and that led to an overall earnings beat. The company points to results lifted by higher selling prices for used vehicles. Shares finished the day down more than 1% to $74.66. Papa John's ousted founder is not walking away from the pizza chain without a fight. John Schnatter has contacted a number of private equity firms to buy back the restaurant chain he left earlier this year. Several private equity firms reportedly have rejected Schnatter's proposal to partner on a bid, and shares of Papa John's popped 8% to $50.14. Online polling company SurveyMonkey made its trading debut after pricing shares above the expected range. The initial public offering put SurveyMonkey's value at nearly $1.5 billion. And while the company isn't profitable yet, the CEO says it's making progress.
On a net income basis, GAAP, we are still unprofitable. We're bringing on some world-class shareholders who really understand the business model. This is a highly cash-generative business. So in the last 12 months, we had a 19% free cash flow margin. And because the 90% of our revenue is subscription-based, we have really high visibility and cash generation with the business. So we see the opportunity to grow and continue to drive free cash flow margins. And over time, you'll see net income.
Shares soared 43% in their first day of trading, closing at $17.24. After the bell, Bed Bath & Beyond reported a surprise decline in same-store sales and missed earnings expectations. The retailer also cut its sales outlook for the year and said profits will come in at the low end of previous guidance. So as you might expect, shares initially fell in after hours. They finished the regular session down a fraction to $18.81. A growing international scheme is leaving a trail of wealthy victims across the country. Criminals call loving families and claim they're holding loved ones for ransom. Andrea Day investigates.
Tell me what you need. I don't know. Tell me.
This is an extortion call. The man on the phone is desperate to save his son's life.
Okay, calm down.
How real was it for you?
How real was it? It was someone had my son. Someone had my son, who I had heard crying and screaming in the background, covering his mouth with a gun to him.
30 minutes, he says, of complete terror. Jamie Heath had no idea he was being conned, but this is no ordinary hoax. An extortion scheme so paralyzing, the feds call it a violent crime. FBI Special Agent Eric Arbuthnot.
The victims also are wealthy architects, doctors, lawyers, professional people. Get the phone call, make the payment.
Heath is a music producer and lives in Los Angeles. Investigators say a recent target for the extortionists. He was inside his home when he got the call.
I hear him say, they're gonna hurt me, they're gonna shoot me, what are they gonna? And then while he's talking, I hear they're gonna shoot. And then I hear someone cover his mouth. Then someone grabs the phone and says, is this Nack's dad? Listen to me closely. How you respond in the next 20 seconds determine whether or not you see your son again.
So right from the start, you thought it was your son?
Oh yeah, it wasn't think it just was my son.
He rushed to his bank to withdraw cash.
I parked there in that driveway in there. I ran out frantically down the street here, ran into the bank through those glass doors.
Once inside, he got a text from his wife
that said, Nack is safe, he's at school.
That's when he finally called his son. According to the FBI, versions of the scheme have been around for about a decade. But it wasn't until recent years that agents made a startling discovery while pouring through victims' phone records. Arbuthnot says they found calls made to people across Beverly Hills were coming in from one place.
Our investigation has revealed, for the most part, these phone calls are being made by prisoners in foreign countries, mostly prisoners in Mexico.
So you're telling me that Mexican prisoners have this terrifying scheme down to a science?
Yes, yes. We're talking about thousands of phone calls over the last few years.
This is undercover video aired by the Mexican broadcast network Imagen. It was taken inside a prison in Mexico City. The people you see on the phone here are inmates, according to investigators, casually making cold calls right out in the open. So these prisoners are really hoping to strike it rich with these calls.
Absolutely. The whole point of this for them is to make money fast, make as much money as possible.
Yeah, plain leaves it.
The call to Jamie Heath, also from Mexico.
Do you think you'll ever forget that experience?
No. No, because for me, those 30 minutes, my son was taken.
For Nightly Business Report, I'm Andrea Day.
We reached out to different agencies in Mexico for weeks with no response. The Mexican embassy told us U.S. authorities have not raised the issue during meetings with law enforcement, but the FBI told us they've been working with Mexican officials to come up with a plan to shut down this scheme. And the FBI says victims end up wiring money to Mexico or leaving it somewhere in the United States to be picked up. Bottom line here, if you get one of these calls, they say you should just hang up. Coming up, women in construction. There aren't very many of them, but one rose all the way to the top. Well, here's a look at what to watch tomorrow. Supreme Court nominee Brett Kavanaugh will testify before the Senate Judiciary Committee about allegations of sexual misconduct. Kavanaugh's accuser has also said she will testify. The revised figure for second quarter GDP growth is due out, and we'll get a look at durable goods orders in August. That's what's to watch on Thursday. New home sales bounced back in August. Purchases of newly built homes rose 3.5%, which was more than expected and follows 2 straight monthly declines. The recent weakness is being blamed on rising home prices and higher borrowing costs, which have outstripped wage gains. Apartment rents are also heading higher, reversing a year-long trend. Rents are up nearly 3%, and the occupancy rate is at almost 96%. Increasing demand is coming in part from a shortage of homes for sale, which has led to higher home prices, and that in turn has pushed people into the rental market, juicing demand. You know, home building is an overwhelmingly male-dominated business, from the framers on the job site right up to the C-suite. But one CEO is breaking the mold, and not just for herself, but for one of the nation's largest publicly traded home builders. Diana Olick is in Scottsdale, Arizona.
Arizona-based Taylor Morrison Homes is the nation's 7th largest publicly traded home builder by revenue, and its CEO, Cheryl Palmer, is the first and only one of her kind in those ranks, a female CEO.
I'm not certain that this was an intentional path for me, but it's one that's felt right for, obviously, I've been in this industry for 20 years. I'm colorblind, I'm gender blind, so they might notice that I'm the single female at the table, but for me, this is just what I do. And you know, all the old jokes about there's no line to the ladies' restaurant, those are all true. But it doesn't change me. I've always said in business, the day I have to change who I am is probably the day I'll stop.
Palmer started in home building first at Pulte Homes, then Taylor Morrison. She took the company public in 2012. You're at the table with the other publicly traded CEOs. Have you ever felt minimized? And if so, how?
For sure. Early days, I think if I were to share a view, I almost think it kind of glassed over. I just had to continue, and I knew that my positions, my views on the business were right. I would say the group of CEOs had to get to know me. And now I think, you know, it's an equal playing field. But it took time. Okay, thanks.
And over time, nearly a dozen years as CEO, Palmer built both her reputation as well as an uncharacteristically female staff given the business.
Do you promote women more as a leader of this company, or do they just come to you because of what the company is?
So I think we promote certain skills that are required, and we have a culture that I think attracts certain types of people around personal development and, you know, the passion and the higher purpose of what we as a company stand for. We actually don't have any affinity programs for females. Now, what I would hear from my people services department is that having me in this seat does attract other women. I think it gives hope. Nearly 50% of our managers, that first level management, is female. I think it's about 49.2%.
And that's incredibly rare.
That's incredibly rare.
But given the product, houses, Palmer sees it as just plain common sense.
I will tell you, I think it makes us a better company, because to get that diversity of thinking at our table, on a corporate level, at the division table, it's really critical. Think about who the buyers are today out buying houses, and to miss the opportunity to have the female thoughts and kind of lens and voice would be shameful.
Taylor Morrison's board is also female heavy, but even with that achievement, she admits to a glaring problem, one she calls a tragedy.
Women just don't tend to be there for other women. And I don't know if that's a result of there's so few slots at the top that people feel like they have to compete. I'm very hopeful that as the industry develops and as we see more women in the space, that women take the opportunity to embrace the need and help other women as compared to push them down.
For Nightly Business Report, I'm Diana Olick in Scottsdale, Arizona.
Well, before we go, let's take one final look at the day on Wall Street. The Dow fell 106 points, the Nasdaq was off 17, and the S&P slipped 9. That's Nightly Business Report for tonight. I'm Contessa Brewer. Thank you for watching. Have a great night, everyone. We'll see you back here tomorrow.